Gamuda Berhad is a leading company in Malaysia construction and infrastructure development sector and was established on 6 October 1976. Since its inception, the company has grown into a key player in the infrastructure industry at both and national and also international level. Gamuda core business is organized into three main segments, which is infrastructure concession, property development, engineering, and also construction. This diversified business structure supports and operational stability and also the sustainable long-term growth. The company has delivered several major infrastructure projects that have contributed significantly to national development, including Smart Tunnel in Kuala Lumpur, the Electricify Double Track project, and the Kuala Lumpur MRT line, which enhance the urban mobility and transport efficiency. And beyond Malaysia, Gamuda has established a strong international presence in Australia, Vietnam, Singapore, Taiwan, India, Bahrain, and Qatar, and has reflecting its competitiveness in the global infrastructure market. Gamuda's strength lie in the technological innovation, digital engineering, and its commitments to sustainable development, reinforced by initiatives such as the Gamuda Green Plan.
The above figures shows Gamuda Berhad revenue graph from 2021 to 2025. The graph above shows that 2023 had the highest income, coming in at 5,159 million, with 1,832 million. Year 2022 had the lowest revenue. As revenue rise, the profit margin falls. It might also result in higher cost of the company. With 2,086 million, 2023 had the highest profit before tax. At 248 million, year 2024 had the lowest profit before tax. The profit is recorded prior to tax accounting. The graph above shows that the highest gross profit of 2,162 million was attained in 2023. At 370 million, 2025 had the lowest gross profit. In year 2024, the total expenses peaked at 4,889 million, while in 2021 recorded the lowest expenses at 1,131 million. So this chart illustrates the company earnings from 2021 to 2025 after deducting all the operating, interest, and tax expenses. The chart shows that 2023 experienced the highest net profit, amounting to 2,021 million, whereas year 2024 reported at least income with a total of 205 million.
In this section, I will be discussing the financial ratio analysis. Financial ratio are used to evaluate a company's financial performance and position by analyzing relationship between key figures in the financial statement. This analysis helps stakeholders assess the company liquidity and profitability. Firstly, the current ratio remained above 1 throughout the period, indicating that Gamuda Berhad maintained sufficient liquidity to meet its short-term obligation. This reflects a stable short-term financial position despite some fluctuation over the years. Next, the gross profit margin increased slightly from approximately 13.4% in 2024 to 14.6% in 2025. This improvement suggests better management of direct construction and development costs, leading to improved operational efficiency. Lastly, the net profit margin declined to around 4.2% in 2024 before recovering to approximately 6.4% in 2025. This indicates an improvement in overall profitability after accounting for operating expenses, finance costs, and taxation. Overall, the financial ratio shows that while liquidity remains stable, profitability weakened in 2024 but showed a clear recovery in 2025, reflecting improving in financial performance.
My name is Siti Aisyah binti Ramli, and I'm going to proceed this presentation by explaining about the horizontal and vertical analysis that we receive from this assignment. Okay, first I will start with the horizontal analysis. As you can see that the horizontal analysis shows clear changes in Gamuda Berhad asset structure and financing over the 5 years. Okay, the tangible asset increased from 2031 until 2023, and we can see also a sharp decline in the 2024 and 2025. Okay, this increase of the tangible asset is indicating a growth and asset utilization phase. However, the sharp decline that I told you before earlier is 2024 and 2025 is asset rationalization, completion of major project, or shift towards a less asset intensive model. Okay, at the same time, investment and amounts due from subsidiaries rose significantly, especially after the 2023, showing a stronger focus on the long-term strategic investment and also the internal group financing. Okay, current assets also fluctuated, with receivable increasing while cash balance declined towards 2025. Okay, and this indicates tighter liquidity and higher reliance on project-based collection. On the financing side, the liabilities increased steadily while equity also grew, reflecting expansion supported by both debt and retained earning.
Okay, next is the vertical analysis. Okay, the vertical analysis shows that non-current asset form the largest proportion of total asset throughout the period, highlighting Gamuda Berhad long-term investment strategy. In later years, investment in subsidiaries became more dominant, indicating value creation through group entities rather than direct ownership of physical asset. Okay, and the current asset made up a smaller share, with trade receivable consistently exceeding cash, meaning short-term liquidity depends heavily on timely collection from the project. In terms of funding, equity remained a significant portion of total financing, supported by growing liabilities. This reflects a balanced financing approach, combining financial stability with strategic use of leverage for long-term growth.
Challenges in operating business. The first one is increasing construction expenses. Gamuda Berhad encountered difficulties due to rising prices of essential materials like steel, cement, and fuel. Variations in global commodity prices and disruptions in supply chain can elevate project expenses, diminish profit margins, and complicate the competitive pricing of projects. The second one is shortage of labor and skill limitation. The construction sector in Malaysia and internationally frequently faces a lack of skilled and semi-skilled workers, reliance on foreign labor, stricter labor laws, and increasing wage demands can impact project schedules and efficiency. The last one is management of finance and cash flow. Large upfront capital investment are needed for infrastructure projects, and payment are frequently made in installment. The cash flow may be strained, and reliance on outside funding may arise because of any customer payments delay or cost overrun.
My name is Siti Khadijah binti Jamaluddin juga, and I will explain why operational improvement is key for Gamuda Berhad and how it affects their financial performance and competitiveness. For their profit and efficiency, operational improvement allow Gamuda to increase profit margin and efficiency. By reducing project costs and minimizing waste, they can make better use of labor and materials. Efficient project planning and execution also help to prevent cost overrun and delays, which ensure consistent profit even when revenues fluctuate due to market conditions. Second, capital and cash flow. Improving operations also means better utilization of equipment, machinery, and other assets. This increases return on equity and ensures capital is used effectively. Moreover, by speeding up billing cycles and reducing the amount of money tied up in working capital, Gamuda can maintain more predictable and stable cash flow, very important for funding large projects and sustaining growth. Third, strategy and competitiveness. Operational excellence support the company's strategic goals. Through digital transformation and tech-driven processes, Gamuda can deliver projects faster with higher quality and fewer errors. Efficient allocation of resources across multiple projects allows the company to handle large and diverse projects simultaneously, giving them an advantage over competitors who may be slower or less efficient. All these improvements together strengthen the company's financial health. Operational risks are lower, margins and cash flow are more stable, and investor confidence is boosted. Ultimately, operational improvement is not just about cutting costs. It's about making Gamuda more resilient, competitive, and well-positioned for long-term growth. Now, I'm going to share how Gamuda Berhad operational improvement impact both the financial market and Malaysia's economic development. First, let's talk about investor confidence. With better profit margins and stable cash flows, Gamuda attracts more investors and reduces perceived risk. This shows the company is reliable and well managed, which increases trust in the market. Second, in terms of stock performance and valuation, operational efficiency boosts earnings per share and strengthens market value. Predictable financial performance makes the stock more appealing to investors. Third, access to capital is easier because a strong operational record allows Gamuda to obtain loans or issue bonds smoothly, which supports funding for new projects. And fourth, efficient project delivered enhances market competitiveness. The company can take on larger projects successfully and increases its chances of winning tenders against competitors. Now, on the economic side, first, infrastructure growth improves. With faster completion of roads, railways, and energy projects, national connectivity is better and development plans can be achieved more efficiently. Second, this project create jobs and enhance workforce skills. Workers get exposure to digital and tech-driven construction methods, which builds capacity in the industry. Third, industrial and regional development is supported. Projects like industrial parks and renewable energy facilities stimulate local economies and attract more investments. Finally, there's a sustainable economic impact. Reduced delays and waste make projects more cost-effective and promote long-term growth that aligns with Malaysia's economic goals. In summary, Gamuda's operational improvement not only strengthen the company financially but also contribute positively to Malaysia's economic development and increase market confidence. These improvements show how a company can grow responsibly while supporting broader national goals.
In conclusion, since 1976, the Gamuda Berhad has become a Malaysian company in engineering, infrastructure, and also real estate. Iconic projects like Smart Tunnel, the electrified double track project, and the Kuala Lumpur MRT line has highlighted its technological expertise and contribution to national and international development. Financially, the company has experienced peak performance in 2023, a dip in 2024, and recovery in the year of 2025, while maintaining healthy liquidity despite increasing the debt level. With a strong focus on innovation, sustainability through the Gamuda Green Plan, and also their strategic long-term project, Gamuda continues to play a key role in Malaysian infrastructure and economic growth.